What's up, everybody? This is the Gore Report checking in for Monday, December 15th. So let's get to it. The Fed cuts but taps the brakes. The Fed delivered its third straight rate cut Wednesday, dropping rates 25 basis points to 3.5% to 3.75%. But here's what moved markets. Powell signaled just one more cut for all of 2026. That's it. One cut. Just one. Markets expected more and sold off hard. The S&P dropped 3% on the news. Powell made it clear they're now in neutral territory and taking a wait-and-see approach. He cited sticky inflation and a resilient economy as the reason to slow. Translation: they're done being aggressive. The dot plot shows rates staying elevated longer than investors hoped. The Fed's basically saying the cutting cycle is on pause until they see more progress on inflation, even though inflation for the most part has been a bit tamed. So on the earnings news, Broadcom crushed earnings Thursday. Revenue was up 30% year over year to $18 billion. AI chip sales jumped 74% to $6.4 billion. The numbers were strong, but the stock tanked 11% on Friday, its worst day since January 2025. So why the sell-off? Plain and simple, margins. The company guided for lower gross margins next quarter due to higher upfront costs on AI infrastructure buildouts. They're essentially taking margin hits to scale production. While the company announced a $73 billion AI backlog and revealed Anthropic as a major customer, management tempered expectations about OpenAI revenue, saying don't expect much in 2026. Investors wanted perfection, didn't get it, and hit the exits. Classic profit taking after a 75% year-to-date run-up. So what you're seeing with a lot of these AI companies, they're a victim of their own success. Investors want perfection, and they pretty much Broadcom pretty much sold off with really great earnings. So that's something to keep an eye on as we go deeper into the AI infrastructure build-out for some of these companies. So Disney bet big on AI. Here's the game changer. Disney struck a $1 billion deal with OpenAI, investing in the company's licensing over 200 characters from Disney, Marvel, Pixar, and Star Wars to OpenAI's Sora video platform. Starting early 2026, users can create short-form AI videos featuring these characters. Now, this is a massive change for Hollywood. So Disney is basically saying, if you can't beat AI, just monetize it. They're turning their IP into AI merchandise, letting fans create content with Mickey Mouse, Darth Vader, Iron Man, no voices, no actors, but everything else. Disney CEO Bob Iger is playing chess right here. He gets licensing revenue, controls how the characters are used, collects a $1 billion equity stake in OpenAI, and most importantly, doesn't get sued by staying ahead of inevitable AI disruption. This could reshape how studios approach AI, license and profit rather than fight and lose. Could there be more deals like this in Hollywood? It's quite possible. We just have to stay tuned. So what's coming this week? Key economic data. On Tuesday, November retail sales. This is our first real read on the holiday shopping season, the Black Friday weekend season. Strong numbers will support the Fed's slowing of cuts going forward stance. On Thursday, this is the big one, November PCE inflation data, the Fed's preferred gauge. Consensus expects it'll stay elevated above 2%, which validates Powell's hawkish tone. Also, Thursday is the final Q3 GDP reading. As of early Monday morning, Dow futures are up 0.33% at 162 points. The S&P 500 is up 0.25% at 17 points. And the NASDAQ is up 0.25% at 50 points. That's it for this week. Stay sharp out there. Go Report checking out.